Yo, what's up everybody? Welcome back to Money Talks TV, back with another Daily 8, where we break down the biggest money moves in like 8 minutes flat. We're talking stocks crashing, monopolies getting busted, and even some international drama, dude. This weekend was wild. Tech giants are sweating, airlines are nosediving, and Google's about to get hit with the antitrust hammer. We're talking billions of dollars on the line, people. So buckle up, smash that like button, and let's dive into the chaos. Alright, first up, the markets. It was a bloodbath out there, folks. The S&P took a 1.5% hit for the week. The Dow and Nasdaq both down over 2%. Futures are looking rough too, still in the red. But the biggest loser? United Health. These guys got absolutely destroyed, dropping a whopping 22% in a single day. That's their worst drop in over 2 decades. Talk about a rough Monday, am I right? We're talking earnings misses, forecast cuts, the whole shebang. It's enough to make you want to bury your money in the backyard. But don't worry, we'll break it all down for you. Next up, we've got Google in the hot seat. A federal judge just dropped the hammer, ruling that Google's been running an illegal monopoly with their online ad tech. That's right. The Department of Justice is coming for them, and they want to break this thing up for real. We're talking about a $31 billion chunk of Google's business hanging in the balance. This is huge news. The DOJ isn't messing around, and they're calling for some serious divestitures. This is just the beginning of the final phase of the antitrust case, and things are about to get even crazier. Remember all that talk about tariffs? Yeah, it's not just talk anymore. The global trade landscape is shifting dramatically, and the effects are rippling through every sector of the economy. From the courtroom battles to the trading floors, the impact is undeniable. This stuff is hitting companies hard, and I'm talking about major players. Corporations that once seemed untouchable are now feeling the squeeze. The tariffs are not just numbers on a spreadsheet, they're real tangible obstacles that businesses have to navigate. Boeing had to ship planes back to the US because of this mess. Imagine the logistical nightmare and the financial hit. It's not just about moving products, it's about the cost, the delays, and the uncertainty that comes with it. Ford's raising prices unless these tariffs chill out, and Temu, that online retailer, is feeling the heat too. They're not just adjusting their prices, they're rethinking their entire business strategy. They slashed their ad spending, and their stock plummeted 22%. That's a huge hit for any company, let alone one that's trying to expand its market share. The ripple effects are being felt across the board. Ouch! DHL's even halting high-value deliveries to the US, which is a big deal for businesses that rely on timely and secure shipments. The logistics chain is getting disrupted, and it's causing headaches for everyone involved. And get this, new port fees for Chinese ships are kicking in on October 14th. This is going to add another layer of cost and complexity to an already strained system. The ports are the lifelines of global trade, and any disruption there has far-reaching consequences. To top it all off, China's ditching US natural gas and buying it from Russia instead. This shift in energy trade is a clear signal that the geopolitical landscape is changing, and it's going to have long-term implications for global energy markets. This trade war is no joke, people, it's the real deal. The stakes are high, and the outcomes are uncertain. Businesses, governments, and consumers alike are all feeling the impact. Buckle up, because this ride is far from over. Alright, let's talk about the wild world of banking. Capital One just got the green light to buy Discover, which is a huge deal for the credit card game. Meanwhile, all those crypto companies like Circle and BitGo, they're trying to become legit banks now thanks to some of Trump's policies. Talk about a plot twist. And get this, JP Morgan's suing people over a crazy infinite money glitch that happened back in 2024. I guess when you're dealing with trillions, even glitches can cost you billions. The banking block is definitely lit right now. Time for some earnings and stock market movers. The market has been buzzing with activity, and we've got some big winners and losers to talk about. As we said, United Health absolutely tanked after missing their earnings and slashing their forecast. Not a good look. Investors were clearly disappointed, and the stock took a nosedive. It's a stark reminder of how crucial meeting expectations can be in this volatile market. But on the flip side, Netflix crushed it. The streaming giant continues to dominate, showing impressive growth and resilience in a competitive industry. They beat their Q1 expectations with a whopping $10.5 billion in revenue and $6.61 earnings per share. This is a significant achievement, reflecting their strong content lineup and strategic investments. They're done reporting subscriber numbers and going all in on ad tech. Smart move. By shifting focus to advertising, Netflix is diversifying its revenue streams and tapping into a lucrative market. Snap-on, however, missed their earnings. Not so good. The tool manufacturer faced challenges that impacted their financial performance, leading to a drop in their stock price. But Comerica, First Financial, and Bank First all beat expectations. These financial institutions managed to navigate the economic landscape effectively, delivering solid results that pleased investors. And in a surprising turn of events, CEO stock selling is on the rise. Executives are cashing in on their shares, possibly signaling concerns about future market conditions. Mark Zuckerberg even dumped $733 million worth of Meta stock right before it plunged 32%. Coincidence? I think not. This move has raised eyebrows and sparked discussions about insider knowledge and market timing. Overall, it's been a roller coaster week in the stock market, with significant gains and losses. Investors are keeping a close eye on earnings reports and market trends to make informed decisions. Things are shaking up in the corporate world too. Spirit Airlines brought in a brand new CEO to try and turn things around. Good luck with that. Tesla's slashing the price of their Cybertruck by $10,000 and delaying their cheaper Model Y. I guess even Elon Musk has to make adjustments sometimes. Chipotle's making a bold move by expanding into Mexico in 2026. Talk about going full circle. And get this, Target's CEO had a meeting with Al Sharpton as their foot traffic and diversity initiatives are struggling. Now for a quick look at what's happening around the globe. From the passing of a beloved religious leader to significant financial moves across continents, we've got a lot to cover. Pope Francis, the first pope from the Americas and a true global icon, has passed away at the age of 88. His tenure was marked by efforts to modernize the church and reach out to marginalized communities. Rest in peace. In the United States, the Supreme Court has put a pause on deportations to Venezuela, which is a big deal for immigration policy. This decision affects thousands of Venezuelan nationals who have sought refuge in the U.S. amidst their country's ongoing crisis. Meanwhile, China's keeping their loan rates steady despite all the pressure from the trade war with the U.S. This move is seen as a way to maintain economic stability and investor confidence in a time of global uncertainty. Swiss banks are seeing a surge in accounts from Americans looking to protect their money from all the political chaos. With the current political climate, many are seeking the stability and privacy that Swiss banks are known for. Can't say I blame them. In times of uncertainty, people naturally look for safe havens to secure their assets. The European Central Bank slashed their rates, aiming to stimulate the economy and counteract the slowdown caused by various geopolitical tensions and internal challenges. Japan's exports missed their targets, reflecting the broader impact of global trade disruptions. This shortfall has significant implications for the country's economic outlook, and South Korea froze their rates to protect their currency, the won. This decision is part of a broader strategy to shield their economy from external shocks and maintain financial stability. It's a wild world out there, folks. From religious leadership to financial maneuvers, every corner of the globe is experiencing significant changes. Stay tuned for more updates. Last but not least, we've got some drama unfolding at the Pentagon. Defense Secretary Pete Hegseth is catching heat over yet another leak from the Signal app. This guy can't catch a break. Meanwhile, over in China, JD.com is going after its rivals, accusing them of trying to sabotage their new zero-commission delivery app. They're even hiring 100,000 full-time couriers to dominate the market. Talk about fighting fire with fire. From Google's monopoly getting busted to United Health stock crashing harder than my dreams of becoming a rapper, from trade wars heating up to the passing of a global icon, the world was a whirlwind of chaos yesterday. But hey, that's the game we play. And now you know exactly where the bag moved, so stay informed, stay vigilant, and stay one step ahead. We're Money Talks, the only channel that follows the bag, not just the game.